Hi, everybody, and welcome to this week's edition of Straight Talk with Brent O'Brien and Tim Rowe from The Straight, brought to you by our sponsors, Inglis and Darley. Today, we talk about the return of Storm Boy to stand in Australia, the influence of trainers on our best stallions, and the racetrack performance of our most expensive yearlings. In racing, what does WA racing on racing.com mean? Changes in Racing Victoria's vet protocols, and the case of the Golden Eagle being a Group 1 race. And in wagering, what the blazes is happening with the PointsBet takeover. States governments throwing darts on point of consumption tax projections, and a special extended interview with New Zealand racing journalist Michael Guerin on what the geo-blocking legislation means for New Zealand racing. Tim, we've got a quite wide remit today to talk about. Great to have you here. Let's talk stallions, something you and I are pretty comfortable at starting out with at least. Decision this week that Storm Boy would be standing at Coolmore, Australia this year at a fee of $16,500, including GST. Seems a reasonable price. There'd be plenty of people that are a bit cynical about Storm Boy, but there'll also be plenty of people that will remember his quite powerful and impressive Magic Millions win. It may seem a long time ago, but there's plenty to recommend him as a stallion, isn't there?
There is. It's easy to take pot shots. I've said this before. It's easy to pot. Most stallions don't make it, so it's easy to pot them and be proven right. But at that fee, I think he's not bad value. Yes, he didn't. Things went horribly awry in Europe, and I'm not quite sure. Aiden came out at one stage suggesting he hadn't been working. Well, I don't think that was right. I think it was a bit of case of Chinese whispers and sort of lost in translation there what he actually meant. But look, he had early ability, won his first, I think it was 4 starts, and at that fee, expectations are going to be quite low on him as opposed to, say, let's use another Coolmore stallion, for example, Home Affairs. $100,000 first season service fee. There's going to be a lot of expectation on those, 2-year-olds next season that they'll want runners. So at 16,000, people will go, well, you know what? If he has some nice horses, well, yeah, he's a chance, and he's out of a Fastnet Rock now, but Justify, he's a big, powerful 2-year-old, which is what the market wants. Who's to say he won't make it? I think he's a chance.
Yeah, and locally bred son of Justify, of course, Twin City of Troy is the son of Justify, Coolmore's roster this year. Yeah, I guess it's a point where you've got to find horse at every market, and you can't judge by the fact that obviously his deal was highly publicised, his stud deal highly publicised, initially broken on this publication, on The Straight, actually, that there was $50 million in kickers. He never fulfilled those kickers, but Coolmore probably parted with around about half of that, maybe a little bit less, for the pleasure of having him now. It's a lot of mares he needs to, service to sort of get the money back. But I think he's half a chance given his profile and what he was able to do. And obviously he was a very, a powerfully good-looking horse, and a horse that'll sort of will appeal, you would think would appeal to the Australian market.
We beat Traffic Warden. I think it was in the Skyline. He wasn't beaten far in the Golden Rose by Broadside, and that was a sort of a bunch finish there. But so really there wasn't a lot between them, and Broadside being an exceptional horse, but he's standing for a hell of a lot more. So again, it's all about trying to find value. If you're a breeder where you think you can get a return, it's all right to spend the expensive service fees, but you'll also get it back. And so, as I say, Storm Boy's a chance, and Coolmore will get behind him and hopefully I'm sure they'll send him some nice mares, and there's some shareholders in him as well, the original syndicate with the Cunninghams and Ridgemont Farm and all that crew that I'm sure will send him mares. So, as I said, if he gets strong, early-looking 2-year-olds like himself, they'll be popular.
We ran an article this week on Run the Numbers, Tim, on which trainers have the most success with the progeny of our top stallions. And no surprise to see Chris Waller on top. I mean, you alluded the other day on your newsletter about, the concept of making sure, these good stallions get the best, horses in the best stables, and that helps. Waller is clearly the most successful trainer of Zoo Stars, 96 race wins across 40 individual winners and total earnings of $17.1 million. He's also on top in terms of amount of wins, racetrack wins for I'm Invincible, Written Tycoon, Fastnet Rock, and So You Think. Probably no surprise there, Tim, in terms of Chris Waller's dominance, but, it does show that he has built this extraordinarily record over the past decade around the fact that he does get access to some very well-bred horses that have enabled him to sort of, parlay his success into more success.
Well, as I wrote the other day, is the big farms, or if you've got a stallion, you want to get them into the best stables, and Chris Waller's been the Premier Sydney trainer for 10 plus years. that so if he's got a good one in the stable, people talk and go, well, I've got a good one, and then everyone, it's like sheep, everyone follows, and Chris has got one, let's buy one. And, he teamed with I'm Invincible, Denise Martin, Star Thoroughbreds. They had some good fillies along the way, Invincibella and a few others that,
Fiesta, yeah.
I'm Invincible was on his way up at that stage, and now he's, a three-time champion stallion. So, getting those horses into the right stables, I guess, paid off for I'm Invincible, Chris Waller and Star for that example. And, yeah, I guess, so you think, and a few other stallions that he's had success with.
Yeah, and what's also interesting, I don't think it's a quirk. I think it's probably not overly surprising, but there's 3 stallions in that top 10 at current stallions that the leading trainer of their progeny was the horse, the guy that actually trained them. So in the case of Zoustar, we've already mentioned with Waller, but it's also the case with Capitalist with the Snowdens, and also the case with, most notably, with the late great Snitzel. Gerald Ryan has been by far the most successful trainer. So I guess there is a notion of going, oh, they know the horse, so we'll give them the horse. But yeah, it's interesting how it flows through, whether, is there an understanding from the trainers about those horses and the way they work, or is it just the fact that, owners are more likely to give them to trainers they know have had success with the horse itself?
Both, bit of both, I'd suggest. But, say with Capitalist, they can be, don't think Henry Field and Miami saying they can get a bit hot at times. And so, Peter can, and the Snowdens have been able to manage that, know how much probably a tendency, their temperaments, how much work they can take, all those little 1%ers and variables that make a difference in winning races. It's, there's thousands of variables, and that's just one or two of them. Trying to work them enough or not, not too much, all that sort of thing that I guess they've had experience with, exposure to more of the progeny and the stallion themselves.
And the other piece I sort of got to point out during the week too, and from a breeding and bloodstock angle, was Warwick Barr's piece on the $42 million yearlings that were sold last season across Australia and New Zealand, and their record. Now this, it's a bit of a habit in the media of creating a bit of a whipping boy of, whether it's tall poppy or whatever else it is, saying, oh, look at them, what a waste of money, or whatever else. This is not an exercise in that. This is just looking purely at their race record and what they've been able to achieve so far. I wrote an article a couple of months ago about the success of $1 million yearlings this year in Group 1 races, but we've had both Devil Knight and Return to Conquer out of that crop from last year, that yearling crop from last year, already in Group 1 races. So that's a good return from them, but interesting to note that none of the top 10 in price from last year have won a race yet. So hoping that there'll be a very strong 3-year-old crop as they come through. But at this early stage, or relatively early stage of the process, it can be a little bit of a delicate assessment of whether you press on with this horse, a 3-year-old. We've seen some of them already put through digital sales in order to sort of, I guess, cut losses and move on. It's the nature of these high price purchases, Tim. There's a level of risk involved, isn't there?
It's also, and it's not just the $1 million horse. I think as the bloodstock values and yearling prices have gone up substantially in the last decade or so, is, we've seen 2-year-old field sizes are down and I think that's partly because trainers are a bit more cautious, not wanting to, that people have paid $500,000 for a horse or $1 million. We need it to be performing when it's, from the get-go. They can't go, well, we're going to race this horse into form or give it some experience. That's why they trial probably more often. We're going to give it another prep. We're going to give it a spell. Where previously, probably you just go, well, we'll race it, and they might be unplaced 3 or 4 starts as a 2-year-old. Nice horse, got ability, but with the values and residual values, particularly the colts that are playing at that high level, they can't afford that so therefore they're better off being unexposed as 2-year-olds, I guess. So that's my theory on it, or I could be wrong, but that's my perception of how it's played out.
Yeah, and that includes Kitsoneria, of course, the very high-profile $10 million daughter of Winks and Piero, who's yet to hit the track. So we'll await that in the new season. The following segment is brought to you by Inglis. An opportunity to work with Australia's most progressive thoroughbred auction house has become available through the renowned Inglis internship program. The full-time role will provide a successful candidate the chance to gain an in-depth insight and understanding of all facets of the Inglis business, which has been in operation since 1867. The successful applicant's time will be predominantly spent with the bloodstock division, while also being exposed to the company's marketing, insurance, digital and rural property divisions in both the Sydney and Melbourne offices. To apply for the English internship, send a current CV with appropriate references and a cover letter explaining why you feel you're a worthy candidate for the role to internship@english.com.au. Applications close 5 p.m. on Monday, June 30. To racing news now, Tim, and news this week that WA Racing will feature on racing.com from next week. We sort of knew this was going to happen. It was just a matter of time. Racing Victoria had sort of announced it. It's a little bit of a signature project for Andy Hode in his new role there. Look, it's obviously a positive thing for WA Racing, also for racing.com. But what I wanted to talk to you about, Tim, because you spent a little bit of time over in WA, over at the sales and whatever else. Look, there are some issues with WA Racing. Don't get me wrong. The Belmont track issue, a current issue at the moment. There's some other bits and pieces going on. But there seems to be a bullishness and confidence in WA Racing that doesn't exist elsewhere in Australia. Is it Australian racing's sneaky star performer, do you think, WA Racing?
I think that's a fair assessment. They've got I think the advantage of the time zone, obviously 2 hours at the moment during winter, but in summer they're 3 hours behind, as we've seen with Victoria particularly, trying to have, push more and more night meetings to tap into that market, whereas WA, 2 and 3 hours behind can get a lot of that, I guess, after work punters, wanting to bet on something, and particularly thoroughbred racing, and, they don't race every day. So you can get, for those that want to follow the state of WA racing, they can follow the horses reasonably well, as opposed to, say, Victoria, where you basically, there's a meeting every day, then they can all clash from Warrnambool and Wodonga and Sale, the following meeting, wherever that may be. So I think there's a lot of advantages there, and they've been frustrated that they've probably been bumped from Sky One and not getting access to Sky Thoroughbred Central. That's why they sort of went it alone, I guess, with Channel 7 and 7 Plus, and now on racing.com. It's got to be an advantage for WA Racing to get in front of more people, particularly with those time zones, and racing.com as well, having more live vision, I guess, or live sport, for want of a better term.
Yeah, and I think the live product's really important. And Racing.com Racing Victoria recently signed a 5-year deal to extend Racing.com's presence on free-to-air TV. It's interesting in an era where everybody's sort of working to other technology, or whether racing probably more traditional in its space. Free-to-air TV is still absolutely crucial to racing's cut through. Which is why we've seen these long-term deals done with 7 over the Saturday broadcast on the main channels, but also with Racing.com. Speaking of Racing Victoria, they altered their vet protocols this week ahead of the spring, Tim. You were across this story in terms of where things is and what it may mean moving forward. What did you make out of it? What did you take out of their little tweaks in I guess, international horses coming into Victoria for the Spring Carnival?
Well, they haven't, there's a lot of, every year there seems to be a lot of angst towards Racing Victoria, but statistics say the number of injuries has, and certainly fatalities in the major races, and Melbourne Cup particularly, has dropped, and hopefully that stays the same. So they're sticking by that, but by their own admission, Racing Victoria, their communication probably hasn't been up to scratch with connections of some of those international horses that have been ruled out of the major races, and so they're going to work on that, but they're sticking by their protocols and bringing in PET scans and extra things. But outside the Melbourne Cup, Caulfield Cup and Cox Plate, the international horses that might run in other races, such as the Champion Sprint and things like races like that, won't have to undergo a CT scan in Australia. So effectively, that was opening the door for K Rising. David Hayes has since said he'll come from Hong Kong, go to the Everest, perhaps the Russell Balding, and then back to Hong Kong this year. So probably the Champion Sprint is out of the picture, but you never know. And then hopefully Melbourne Spring Carnival 2026 for K Rising if he maintains his form. But it is a little pivot, I guess, to try and, it is a very fine balance, and they, to get the best horses to the carnival, of which K Rising's got the highest profile, and as we've touched on with World Pool and the value that offers, certainly for the Everest and the ATC is probably worth $1 million. So it'd be the same for the VRC and Racing Victoria.
Yeah, the VRC would be the beneficiaries of that. On the Spring Carnival, like you wrote an article this week based upon Lazat's win at Royal Ascot. When does the Golden Eagle get Group 1 status? We're probably a little bit surprised that when these races were all elevated last year, 17 races across the board from a New South Wales perspective. Obviously they've been contested and there's debates about whether they sit and, whether they're recognised and all that sort of stuff. We'll leave that aside for one moment. But look, on face value, and just looking at the volume of graduates that have come out of that race, not only last year, but from the years prior, it is a world-class race producing world-class results. And if we're serious about wanting our best Group 1 race, wanting our best races being Group 1, then surely the Golden Eagle needs to get the nod.
Well, I'm certainly not a handicapper. I'll put that out there first and foremost. But under the 115 official rating that's used for Group 1 races, last year's race hit that at the time. And, we've seen subsequent form with 8 Group 1 winners, as you say. My understanding is the year before's race was very strong, but it was just marginally under the 115. But with subsequent form, you could mount an argument that it did hit the 115. So technically, it didn't meet the 2 years and 3 years ratings. But as I said, that didn't stop the Everest and other races being upgraded. From an outsider's point of view, it's very clear that Racing New South Wales want the Golden Eagle to be a Group 1 immediately, and that's why I didn't think they went down the black type guidelines approach, which are apparently, according to Peter Volandis, being reviewed at the moment by Racing Australia. Nothing moves quickly at Racing Australia.
They've been reviewed for 8 years, Tim. They've been reviewed for 8 years. Like I wouldn't be crossing my fingers to have a quick resolution of that. But anyway.
Yeah. So, I looking at it objectively, I don't think you can argue otherwise that Golden Eagle is a very good race. It should be Group 1. Where the angst comes is some of the other races. The Silver Eagles are Group 2, and that's probably not even a good argument. Some of those other ones, like the Warriors and the Gongs or whatever, that's where the issues come down. The races that aren't either got black type or should be downgraded or lose black type status across the country, not just New South Wales. So, if we're patient, maybe an outcome will actually occur where, there's a proper working pattern. But, time will tell on that. I'm not holding my breath.
I may be, forced to throw out my Victorian birthright here of being born in Victoria and raised, spent a fair bit of my life in Victoria on this one, but I would rather have the Golden Eagle as a Group 1 than the All-Star Mile. But, I probably haven't been the greatest fan of the All-Star Mile in the last few years, but I think it's becoming a much more significant race in terms of the structure of Australian racing and, credit where credit's due. I think, I'm not a big fan of $10 million, massive purses, but it has attracted significant horses. And if they can sustain that, and it's been going for 6 years now, Tim, it's not like it's just a thought bubble. It's a significant race and it's making significant inroads. So in my opinion, I think it should be a Group 1. We've got to get serious about how we structure our proper pattern. The following segment is brought to you by Darley, who's won 3 of Europe's stallion making races. Native Trail. He's mixed in all the right circles. He's won the National Stakes just like Debawi and Danehill Dancer. He took out the Dewhurst just like Too Darn Hot and Pitatubo, and claimed the Irish 2000 Guineas like Kingman and Debawi. An unbeaten champion at 2, a classic winning 3-year-old, and a superb specimen from the same line as I'm Invincible. Native Trail returns to Darley, New South Wales this season. Racing class becomes breeding class, and at just $27,500 including GST, he's an opportunity not to be missed. All right, Tim, finally in wagering. We used to have a relatively quick wagering segment, but we won't be doing it on this occasion because we've got a quite extensive interview with Michael Guerin coming up at the end of our little chat here. I urge people to have a really good listen to that because there's no greater authority from a media perspective on what's going on in New Zealand at the moment in terms of racing and how the Entain deal and now this geo-blocking law coming in will affect things. We'll get onto that in a minute. But first of all, Tim, there's a question here from you. Bren, the PointsBet Mixie Bet sale is a schmozzle. Can you explain what actually happened this week? The answer to that, Tim, without putting words in, sorry for asking the question on your behalf, just a debacle. An absolute debacle. Like, I've never seen, I don't know. I'm not experienced in finance journalism, so I'm not going to be sitting there going, this wouldn't happen in my day. But how do we end up in a situation? So the current situation is, right? Yesterday we were told at 11 o'clock, right, the Mixie takeover of PointsBet, Japanese company, significant moment, big Japanese company entering the Australian market, had been approved by shareholders. A couple of hours later, note comes through, Bet are contesting it, their votes weren't counted. PointsBet come back, said, yes, you took the votes away. That's your fault, blah, 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 back and forth. This is ugly. Like, don't get me wrong. These two companies don't like each other, PointsBet and BetR, in terms of, the language that's been exchanged. Then we get a message this morning saying, oh, no, hang on. Computershare, who've, in the words of the Australian Financial Review, have done more of these votes than most people have had Melbourne Cup bets. I don't know about me, but certainly a lot of other people have admitted that they had a systems error and actually it was a mistake. And actually, it was defeated. So, like, if you're Mixie sitting back in Japan, one of the, corporate high flyer listed company, significantly, it's really interesting history and background, but you're really shaking your head going, what is going on in Australia? How can they have a corporate vote on a $400 million merger and just get it wrong? There's some serious questions to be asked here, and I'm not going to get too much into the corporate aspect of it or whatever else. I guess the significant thing we're looking at here is the outcome. We're going to have one or two outcomes out of this, you would think. Well, first outcome is Mixie gets into the Australian market, gets 5% share of the market to add to its little sort of presence with BetM, and develops PointsBet as a brand, and it's to market and try to grow where it comes from. Or we have a combined BetR PointsBet product, which creates about probably close to 10% of the market, and which creates a bit of a shake-up in the landscape. So it is a significant story. I apologise to those people who might feel like they're sick of reading about this corporate schmozzle. I'm probably getting close to sick of writing about it, but we'll cover it to the end. So that's sort of where it is with that. Now, talking of schmozzles, and our word of the day will be schmozzle, Tim, the projection from the various state governments through their budgets on point of consumption tax revenues. Now, this has been a bugbear of mine for a little while now, for a couple of years now. They are fair dinkum throwing darts, Tim. They are throwing darts on this stuff. They've got, like, on one hand, you've got New South Wales, probably rightly, revising down its point of consumption tax revenue and telling the racing industry, which gets about 30% of that revenue, right, you probably need to adjust your models because we're saying over the next 4 years, we're going to get $170 million less in pot than we expected. And that's understandable, given the drop in turnover, given the other challenges. Now, New South Wales may undergo a bit of a change in model in the next little bit, which might change things around. But regardless, they've probably done the responsible thing, where before they've been far too bullish, and now they're like, all right, well, let's cut back our... Now, when they first put up point of consumption, so when the current New South Wales government came in, right, they estimated this year, current year, there would be $418 million in point of consumption tax revenue on an annual basis. They've now said that'll be $285 million. Now, how do you get $130 million wrong? That's not the least of my concerns about this. Queensland appear to be living in a different world where point of consumption tax revenue just goes up forever, and a change of government hasn't changed that. There was quite a strong reaction from the wagering industry last year when previous Treasurer Cameron Dick came out and said, hey, point of consumption tax revenue, it's all good, everything's great, it's going to keep on growing based on population. The wagering companies came out, and a few other significant people came out to me privately and said, this is absolute rubbish. This is nowhere near the model. But the new government under under David Crisafulli have come out and sort of pretty much just rolled that out again. Now they're currently doing a racing review and whatever else. The PRA say, we don't rely upon Treasury modelling in terms of modelling what revenue we're going to give from point of consumption tax. Fair enough. Why would you? But my question, Tim, and my concern is the people within Treasury who make these calls then feed that information through to policymakers who make decisions. We are currently in an environment where gambling is highly political and highly criticised, right? By its nature. So be it. But you'd love them to be working on correct figures. You'd love them to be working on the fact that this is actually what it means and this is where the money's coming from and this is the trend. Because if you've got significant regulatory or significant legislative decisions being made based upon erroneous data, that would be disastrous for the wagering industry and for the racing industry as a whole. So it's my little sort of editorial statement there. Get it right, people. Do your sums. Work it out. It's not that hard, surely, to not go down that path. And I'm pointing the fingers at everybody, not just at anybody in particular, but there's a few standout sort of notions there where you're like, seriously, turnover's been going down for 3 years. Adjust your models. Go on, Tim.
Well, I took a couple of things from your article. One was New South Wales Treasury claiming that turnover's gone back to retail. I do like using the EBTs from time to time, but I can assure you I'm not turning over that much. To use that as a basis is just a joke, and how there's got to be a punter that in Treasury that would just pull that up immediately. I don't know what's going on. And I did like the photo, whether it was by choice or by accident, but you had on the straight, go and check it out yourself, picture of the New South Wales Treasurer in front of the Sydney Film Festival. It's fiction. It was fiction, complete fiction. What that POC tax, yes, it's hard to be accurate, but not even close to the mark. And I'm sure they'll be revising it again in 12 months' time, saying worry up by, a lot, a big margin. And, that's why punters, as a rule, are quite good, because we try to talk in probabilities, or, even if subconsciously. So, it's a bit scary that, the industry is being governed by and decisions being made through Treasury with, as you say, data that's extremely unreliable.
Yeah, and clearly not accurate. In my and that's not just my opinion. It's clearly not accurate. They've got it wrong every year. Yep. Speaking of significant decisions, the New Zealand decision yesterday around the legislative net being put around, effectively, it's not too dissimilar to what's happened in Australia, but pretty much banning overseas operators from operating in those markets. What I think is fascinating about that is, obviously, it's a monopoly market. We had an extensive chat with Michael Guerin about this. He was fantastic with his time as always, but very detailed. Yeah, and here's what Michael had to say about this change and what it means for New Zealand racing. And joining us is Michael Guerin, racing and sports journalist and broadcaster, a racing editor of the New Zealand Herald and host of the Guerin Report. You wear many hats, Michael, but it's an interesting time in New Zealand racing at the moment, and broader across New Zealand, with obviously the Entain stuff we've spoken about the last couple of years, but a significant development this week with the implementation of the geo-blocking from basically what enables the New Zealand government to, I guess, restrict overseas bookmakers from offering odds to Kiwis, and gives Entain a virtual monopoly within New Zealand. I guess the answer, or the question, is $100 million, obviously part of this payment as well, which we'll get into in a minute. But, I mean, what do you think the knock-on impact for racing in New Zealand will be around this, Michael?
Yeah, first of all, hi, Brent. Hi to Tim and to all of your viewers. It's an interesting one. I think there's the initial $100 million payment, of which $20 million will go to Sport New Zealand, because obviously sports betting contributes a lot of the basic profit that the TAB at Entain make. The other $80 million will go to TAB New Zealand. And it's really important to clarify that is the regulatory arm of the New Zealand TAB. So there is the regulatory arm, TAB New Zealand, and then there is Entain, which is basically the operational arm, which, as part of the 25-year deal, runs hunting for the TAB and their secondary brand, Betcha. So this $100 million doesn't go to the codes directly. It goes to TAB New Zealand, $20 million to Sport New Zealand. They'll keep some in reserves, because during COVID, the New Zealand TAB faced insolvency because it had no reserves. And then the rest of that trigger payment can be used for things like fixing racetracks and all the things that New Zealand racing's really struggling with. So that's the knock-on effect for New Zealand racing in the immediate future, gentlemen. But also, of course, with effectively what's a legislative net, because it's not actually geo-blocking. You will be able to get on to the websites if you are a New Zealand punter who bets with PointsBet or Bet365. You may still be able to get on to that site, but the restrictions are that the bookmakers there won't be able to take bets from New Zealanders. So that's not unusual. Many jurisdictions in the world face the same thing. What is unusual for New Zealand, and again, it's not totally rare, is that they are the sole betting operator in New Zealand with those two branches, TAB New Zealand and Betcha, which is their newer brand. So it's effectively a monopoly for the one company, TAB New Zealand, and its operational Entain. Now, many people would argue that's no different to Hong Kong. If you live in Hong Kong, technically, you are supposed to only be betting with the Hong Kong Jockey Club. If you live in Australia, You also can't bet with offshore operators, but of course the difference is there are numerous more bookmakers and therefore no monopoly. So it's quite complicated. It's not rare for a jurisdiction worldwide to block its punters from betting offshore. What is more rare is that semi-monopolistic situation, which is going to develop potentially as early as next week. Now, none of this is a surprise. When the Entain deal was done 2 years ago with the TAB, and had it not been done, whether it was Entain or another betting operator, there was going to be chaos in New Zealand. They simply didn't have enough money for the many, many things they needed to get right, many of which still haven't got right through infrastructure and educational training and then lots of other stuff, rehoming of horses. We still don't have enough money for that. So the deal had to be done with somebody. So the deal was done with Entain. At the time, it was made very clear. Eventually, the legislative net, which was voted into law in the New Zealand Parliament yesterday, unanimously, by the way, that was always going to happen. Now, the Minister for Racing, Winston Peters, said in December, we are going to aim for May or June. So they haven't missed by much. It's late June, and they've got this done. What shocks people is that now, from next week, effectively, if this is implemented in the right way, is that the New Zealanders who bet with those offshore operators shouldn't be able to bet with them because the offshore operators should say, no, your address, which of course everybody needs to have these days with the anti-money laundering laws, says you reside in New Zealand and therefore we can't take bets from you. So yes, that triggers the $100 million payment we previously discussed, but you would hope, and this depends on whether the forecasts are exactly right, over the next 10, 20, 30, 40 years, all the money which was effectively being lost offshore to offshore operators, some of whom in a race fields legislation type thing put money back into New Zealand, but some of whom did not. If that money comes back into New Zealand and runs through the TAB system, there should be more money going to New Zealand racing and more money going to New Zealand sport. The question is how much of that money you think was going offshore can you capture and satisfy the New Zealand public that they should still be betting with the TAB. And that figure's really hard to quantify with that very slight sliver of people who, through bowlers or VPNs or other ways, may still be moving some of their money offshore. That figure generally by the people I've spoken to in the industry isn't expected to be high. The bigger question, and the really hard one to forecast, is how much of the money, which is heading offshore now, will still be bet by New Zealanders with the New Zealand TAB.
Yeah. Mick, with the 100 million and how that's dispersed and, a proportion will possibly, or the extra betting revenues will go to thoroughbred racing. How should that be spent, or what should the priorities be with that extra revenue? Do you think there is a lot of challenges for New Zealand with, as you touched on, infrastructure and different things? How should administrators, I guess, handle that influx of cash?
Well, we're lucky that in the north, Timmy, we have a very strong situation with Auckland thoroughbred racing. Ellerslie is now working as it's supposed to. They have a very strong unity with what was formerly counties racing, and they have money behind them. So they're in a good position. But the rest of the country doesn't have quite that same financial might. The next couple of big questions. First of all, Hastings and the Hawke's Bay, which hosts the early Triple Crown here in the spring, usually needs to have its track recambered. So we need to get that fixed. Our Wapuni was fixed, but not very well. That needs to get fixed. And there's major questions over the earthquake compliance of the grandstand at Trentham. So these are three really big deals. You can't afford to lose Trentham, Hawke's Bay, and our Wapuni. These are important things, and racing in the Central Districts has to be kept alive and vibrant. Then the bigger question comes, and that is the Greenfields project out of Waikato. So Waikato wants to take its three major racing clubs and merge them into a greenfields project, which not only can host training, race meetings, but potentially eventually the New Zealand sales. Because there is some question over whether the Caracas sales ground, which is magnificent and will host the dual wheeling sale today, will that still be viable to be kept as a 5 to 10 day a year business in 5 or 10 years, considering its worth and where the future of New Zealand bloodstock lies? So this Greenfields project in Waikato, if is it in fact to go ahead, has to encompass the potential for all of those things. Now, if you're saying you have $70 million left out of the 100, 20 to sport, 10 to reserves of the TAB, how much of that has to go to the immediate problems and how much has to go to helping Waikato thoroughbred racing with the Greenfields project, which is an enormous thing to plan, and even the architectural plans around it, let alone the development and, of course, making the thing happen. Over the next 10 years, that might be the most important project in New Zealand. So not only does that trigger money come into play there, fellas, but what is hopefully forecast to be this new money, which will no longer be lost overseas, which will come back in to the TAB. Again, those figures are hard to work out, but there has to be, just logically, more money bet with the TAB if New Zealand punters from next week can't bet offshore. So those projects are really crucial, and that's away from some of the other smaller projects, like, for example, in harness racing, Alexandra Park has lost a lot of land. They're going to need to sell its training facility at Franklin Park, and they're going to need to find a new training facility because it's too expensive for young harness racing trainers to buy land in that part of the country. So there's a lot of things, guys, we need money for here. And the question is, what's more important? Is it more important to have the ability for most punters to bet offshore with these operators, or is it more important to have a sustainable New Zealand industry and the best chance of having the second thing, whether people like it or not? Because I fully realise this is an emotional subject with people and they're having a choice taken away from them and they're not happy about it. But the question is, what's more important? The option for a country which doesn't have just about any professional punters, so this isn't really affecting too many people's livelihoods. What's more important? That choice, or the best financial future for the New Zealand racing industry, which does have a lot of full-time employees and does create an enormous amount of tax turnover. So what's more important, getting all that money back here to make that sustainable, or the average person having the opportunity to have a bet offshore when, yes, we would love to have that opportunity, but it probably doesn't best monetize the New Zealand racing industry or the TAB, which of course has been owned by the racing industry for a very long time and is, alongside land assets, its biggest asset. So one day they were going to have to monetize the New Zealand TAB as best as possible. And part of that, along with the Entain deal, was this deal, which is to say, well, we run racing in this country. We put money into sport. We deserve to have a fair crack rather than losing out to operators overseas who don't do that. Again, emotional. Again, a lot of people may not like it, but you have to ask yourself, to being honest, if you love New Zealand racing, what's more important, the choice or the best financial future for the industry in New Zealand?
What interesting that you talk about from a punting perspective, and you say there's obviously not many pro punters in New Zealand, which it's probably interesting to us in Australia. We probably hear a lot from our pro punting lobby. They probably aren't heard by the people they want to be heard by, but they're quite a vocal, outspoken group of people who shape the debate around racing and discuss the broader debate. And they add a lot to it, to be fair. We've had guys on here on this very podcast over the last few weeks that have, created a lot of interesting points and references. But I guess from a punting perspective, is there a danger there that taking choice away can, move and sort of reverting to a sort of a pseudo monopoly? Are you concerned, and is there a concern that it will be a disincentive for people, and that to us without choice, things like, choosing price in terms of, having different providers who provide different prices or different products or whatever else will be diminished. I mean, it's obviously the opposite to what Australia has moved towards, where you've got a very much many different options in terms of where you bet. Do New Zealand punters, do you think that is a really an intrinsic part of what they like to have choice, or do you think that they don't really know better and they'll be happy to take an opportunity which will actually help underpin the future of racing?
I think, first of all, you need to understand the New Zealand betting market. It is enormously more immature than the Australian market. When you talk about arbors and percentages, if you talk to anybody, I'm talking outside a handful of people, literally a couple of hundred people, when you talk about a market being set to 130 to 120% in New Zealand, people have no idea what you're talking about. Absolutely none, because they didn't grow up with bookmakers. I've never seen a screen once in New Zealand, as you do in an Australian bookmaking situation, where you see the market's now down to 119 or 118. No one knows what that is. And most New Zealand punters are just happy to back a winner. So you're not talking about a market where you have a lot of people on Betfair. There's not a lot of arbors. There's not a lot of people who are trading here. We got $4. I'm laying off at $1.70. That doesn't happen in New Zealand very often. There are some people. And I respect enormously the professional punters for the liquidity they put into markets and how important they are. But we just simply don't have many in New Zealand. Now, with the disincentive, I was initially concerned when I thought of this 2 or 3 years ago about two things. First of all, would the percentages go through the roof? Entain, TAB got open markets at 150. But effectively, they are going to start using the same mechanisms, the same machinery and technology for Ladbrokes, and that will mirror the TAB odds between Ladbrokes Australia and New Zealand. Now, Ladbrokes Australia's markets have to be competitive because they're in a very competitive space in Australia. And I don't see them just saying, well, we're going to add an extra 10% to the market for everywhere in New Zealand. That's just not going to work. Most importantly, we go back to that regulatory arm. So this is somebody who's running the business side of it, but the TAB New Zealand regulatory arm, which reports directly to the minister, has the opportunity to go back to them and say, if that started, and by no means am I saying that's going to start, but they can say, well, hold on, you're giving one set of odds in Aussie and one set in New Zealand. That's not fair. So that's a safeguard if you think that. The second thing, obviously, is restrictions, because if you think you're going to be restricted, and there's a thing called punter's promise in New Zealand, which means you should be able to win up to $2,000 on any New Zealand horse race on a win bet, which is a very good one. As minimum bet laws go, it's a very, very good one. Now, some people contact me on social media and say I'm not being allowed to do that. Well, if you're not being allowed to do that, first complain to the TAB, then TAB New Zealand to the regulatory level, and if you get annoyed enough about it, complain to the minister. That's how democracy works. Now, there's some people listening to this who are going to say, well, that's complete fantasy. I can't get on for this. I can't get on for that. Well, I'm a restricted punter. I've been one of New Zealand's first restricted punters. So I got restricted back when they started restricting. So I'm what's called 20%. If they bet usually to win 10,000 on a race, I'm on 2,000. So I'm the minimum punter's promise. Now, here's where things get interesting. You can get that 2,000 punter's promise on both TAB New Zealand and Betcha, which is their other brand. It's their brand they launched a little bit like Ladbrokes did with Neds. They launched it to get younger people in, a bit more fun. It's a bit more sexy. I don't use it very often. But that means technically, and I'm not saying this will continue because I don't know, but at the moment I can only talk from somebody who's been a restricted punter since they started restricting people. I can get on to win 4,000 on a horse in New Zealand with the book. The other option, of course, is you can go to the tote. Now, if I've done that, because you can pop down to the TAB and you can bet cash, you can bet on the tote, most people just don't want to do that. They're too lazy. We all want to bet on our phones while we're watching television. I totally understand that. But it's not like just because you only have two places you can bet now that you can't get on to win what you want to win. And the reality is, whether people like hearing this or not, fellas, if you're getting on with offshore operators to win 5 or 10 or whatever thousands more, it's because you're a losing punter. Whether people like to hear that or not, that's the reality. Anybody who's a pro who watches this knows if you're getting on with the big boys offshore to win $5,000 or $10,000, because we're talking you can probably get on for 4 in New Zealand. If you're getting on to win that, you're a losing punter. And if you're a losing punter, it doesn't matter whether you're losing to the New Zealand TAB, Bet365 or PointsBet. You need to rearrange the way you go about gambling. So you'll get a lot of people complain about market percentages and I'm restricted and that sort of stuff. And I respect that. And they should absolutely complain to the TAB if they think they're getting restricted outside the norms of what they should be. But people who are trying to tell me that they can get on to win whatever they want with an offshore operator, almost certainly, unless it's a very special case I don't know about, are losing punters. And if you're a losing punter, in my opinion, it doesn't really matter who you're losing.
Mick, we're a couple of years into the Entain NZ Tab deal. There's been some personnel changes more recently over there and Australia, of course. And Matt Balesti's now running NZTR. What's the vibe like and how are you seeing it playing out at the moment, Mick?
I think Dean Shannon leaving, it was not seen as a blow because the guy who's taken over the interim, Andrew Virus, is a very respected guy. And from my limited dealings with him, he seems a legit guy. I don't think there's any harm here that he's just going to do anything silly. He's a smart operator with a lot of experience in the space. But Dean absolutely had a soft spot for New Zealand racing. Everybody knows that. And I think he enabled his executive team to be very generous in the way they sponsored racing in New Zealand and some of the schemes they set up to help people with breeding and all those sort of things. I think genuinely they believe that the more horses they get, the more product they'll have, the more turnover they'll get. So therefore there's long-term effects to that. I don't know exactly how the Entain executive team's going to be set up in the future, but look, it's a pretty talented company. You don't get to make that much money worldwide unless you know what you're doing. So they probably have headcount issues here because it's really hard to get Australians who want to live in New Zealand. That's the reality of it. And we don't have a lot of skilled operators in New Zealand because, again, it's not a mature marketplace for gambling. So where they end up, the guy who's in charge of New Zealand at the moment is a guy called Sam Moncur, who's a very good numbers man. He's not going to do anything silly. He's not going to make any radical decisions that stuff things up. And if Virus becomes the boss of Entain Australia, New Zealand, again, there'll be consistency and people will say, yep, trustworthy guy, we've got this down pat. What they're probably concerned about is we're 2 years into the 5-year part of the guaranteed turnover. Will the forecasts at the end of the 5 years be where they should be, that we can maintain the monies coming back to New Zealand racing plus the monies which Entain are hoping to make out of it? And that's impossible to tell. Now, some of those forecasts have been affected by cancellations of race meetings and issues with race meetings being called off, which takes us back about 10 minutes into this conversation.
Yeah.
And that comes into facilities. And you need the money to make the facilities work. And how's the best way to get the money to make the facilities work? You trigger a $100 billion payment by putting up a legislative net. So it goes round and round and round because those concerns about the forecast in 3 years' time, and I have no idea how on track they are, but they're not going to be able to meet those forecasts if they keep canning race meetings. And they're not going to be able to stop canning race meetings until they have the infrastructure to have those race meetings, and they need money to put that infrastructure together. So again, we ask ourselves the question, what's more important? Infrastructure, and therefore the ability for those forecasts to become real, to make New Zealand racing sustainable past that first 5 years, or hunters having a choice? That's the question which people have to ask themselves. And when you say punters having a choice, you have to say to yourself, again, if you're a losing punter, does it matter? Or are you better off just upskilling yourself? And can most people, because 95% of bets placed in New Zealand are $50 or less. So therefore, those people aren't even remotely affected by any of this. Can most people still get on for a fair amount? Now, I would think so. And then you start saying to those people who can't, What are you going to do about it? And what is the regulatory arm, TAB in New Zealand, going to do about it? And the minister was really clear yesterday, and surprisingly clear in his language when he spoke about the legislation going through. He was very precise that he would be involved and he wanted punters to get a fair deal. So with that coming from that high up, with the new advisory committee, which is headline New Zealand Racing, sitting over and alongside TAB New Zealand and them working alongside Entang, there would seem to be some safeguards here. Now, some people would look at me and say, well, that's naive. I haven't got any proof that it is. So I'm going to wait to see how it pounds out. But I've also been doing this for a long time, fellas. And like you, I've heard many, many times, the game's stuffed. The game's up. I'm giving up the punt. This is the end of it all. I haven't yet seen those claims ever come true.
Not until I'm
Mick,
dead, I'd say, Mick, is the only time that happens. Or will happen.
We could talk for hours about this and about the parallels and I guess the differences between Australia and New Zealand racing and the punting landscape. But it's a fascinating and in-depth chat as always. Really appreciate your time. Thanks so much. And we'll obviously catch up along the line. It'll be fascinating to see how all this plays out.
Look, guys, it's great to have the opportunity. I have tremendous respect for what you guys are doing. I know you get right into the minutiae of basically the thoroughbred industry, which I love so much. And in a general paper like the New Zealand Herald, I don't get the chance to do that. And either do many of the other journalists. So we appreciate it. We will see how this pounds out and we'll try and tell people the truth. It's a little bit tricky with the Herald. Like I wrote a 900-word story for the Herald today, but you can't explain things like talking about percentages and all the things we just discussed because the general punters don't care. They just want to think, how's it affect me? How's it going to be implemented and how can I get on with it? And that's the tricky thing for most of the general journalists. So it's really important to have independent sites like what you guys have got. And hey, anytime you guys want, for what it's worth, my opinion, I'll be privileged to come on for a yak.
Your opinion and insights are
Thanks very much,
appreciated. Thanks for your time.
Cheers, fellas.
Thanks for joining us on Straight Talk, brought to you by our sponsors, Inglis and Darley. Don't forget to give us a rating wherever you're listening to us on Apple, Podbean, YouTube, Spotify. Be sure to subscribe, send us an email, editor@thestraight.com.au. Suggest what you might talk to, interviews the subject, whatever else. Thanks for joining us and we'll talk to you again next week.